Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook, firstly we start with the Shanghai composite in Asia. It booked generally downtrend in Asia on Wednesday as of course major indices in Australia, Japan and also Hong Kong, all of them fell. The Shanghai composite gained about 26.23 points or about 0.9%, 2929.56. The Japanese benchmark, however, the Nikkei 225 index retraced losses over 1.7% early on to close down 136 points or about 0.85%. European equities were trading lower on Wednesday as a brief recovery in oil prices lost momentum after, of course, comments from Saudi Arabia's oil minister, which of course we will comment later today. The pan-European Stocks 600 index meanwhile was down about 0.9% with all sectors in negative territory. The yen of course gained against key peers like the dollar and of course the euro on Wednesday as sagging stocks and crude oil dropped bids for safe haven currencies. The dollar of course slipped to an 11-day low of 111 yen and last fetched 111.95. The yen is in theory not the currency that is attracting bids, but speculative buying continues to push the yen higher, and the trend will continue as long as participants feel relatively safe buying the currency. The dollar was expected to have an edge over the yen at the start of the year when the Federal Reserve was seen embarking on a series of interest rate hikes. But of course, recent global market volatility involving sharp downturns in equities and also commodities has of course tempered US rate hike expectations. And this of course enhancing the appeal for the safe haven yen. The euro was a little bit steadier today at 1.1011 after dipping to about a 3-week through of 1.0990 overnight. Dovish comments, however, from the Federal Reserve officials helped curb the common currency's losses against the dollar. The Fed chief, Robert Kaplan, mentioned that the central bank may need to keep interest rates unchanged for an extended period, and that is, of course, only to give inflation time to raise back to its 2% target. The possibility, however, we're looking at the British economy, leaving the European Union continued to buffet the pound, which of course nudged down to a fresh 7-year low of 1.3960 versus the dollar. Mark Carney also said Bank of England officials have scope to loosen monetary policy if needed, as concerns that Britain may leave the European Union could put further pressure on the pound. Gauges of pound volatility versus the dollar surged to the highest levels since 2011. While of course, the options market signaled more losses ahead for the pound. Gold in the commodity sector retained sharp overnight gains on Wednesday, bolstering along with other safe haven assets, as of course risk aversion in the markets sending equities tumbling. Gold was steady at $1227.40 an ounce in late Asian trade after climbing 1.4% in the previous session. Assets in the SPDR Gold Trust, the top gold-backed ETF, are at their highest since March 2015. The fund's inflows since the beginning of the year have already surpassed outflows for the whole 2015. Oil in the energy sector slid on Wednesday, extending sharp falls from the previous session after, of course, exporters from Saudi Arabia ruled out production cuts, and industry data showed a further build in U.S. crude stockpiles. U.S. crude futures were trading at $31.14 per barrel in early European session, down 2.4% from their last settlement. The falls, of course, were a result of an apparent lack in cooperation among members of the Organization of Petroleum Exporting Countries to freeze or, of course, at least cut production and, of course, rein in overproduction that has pulled down prices by 70% since mid-2014. That's all for the most important news of yesterday and today. Stay tuned for more important. Thanks for watching. See you next time. Bye-bye.